Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Welcome to the Finovate podcast. This is Greg Palmer. Today, I am talking with Ron Shevlin of Cornerstone Advisors, a man who has been on stage a number of times at Finovate, participating in our Analyst All-Stars. He is also a frequent writer and Cornerstone Advisors, contributes to Forbes and a number of other publications. Ron, thank you so much for joining me on the podcast.
Thanks for having me, Greg.
So what we want to talk about today is, with all of the uncertainty in the world, coronavirus, the impending recession, there are clearly large problems taking place all over the world. And like every industry, this has a lot of people in fintech worried. It's not immediately clear, though, what all this is going to mean for us as an industry. And there are a few competing visions that are out there. What are your thoughts? What do you see happening as a result of this uncertainty and these new steps being taken for these two significant events in our lifetime?
Yeah, thanks for asking. I could probably sum that up into three words. Ready?
I'm ready.
I don't know.
Uh-oh. If you don't know, what chance does anybody else have?
Yeah, no, look, I don't mean to be flip about it, but you raise a good point. There are too many uncertainties. And I know while this might sound somewhat counterintuitive of things, but to kind of be worried about what comes out of this, I think for most financial institutions, fintech providers, fintech firms, technology firms, and so forth in the banking space, it's actually the wrong thing to be thinking about at the moment. At the moment, there's higher priorities, and those higher priorities are, number one, stability. You think about what's going on, we're wrestling, all of us, with three major concerns: our physical health, our mental health, and our financial health. And if you're an executive, either at a fintech company, a bank, credit union, whatever it might be, you're wrestling with those things on multiple dimensions. Your personal, financial, physical, and mental health, your family's physical, financial, and mental health, your employees, three areas of health, and your customers, and so that's, you start adding it up, that's pretty daunting. To be trying to predict what's it going to be like in 6 months from now or a year from now, not only is it hard and nobody knows because of the uncertainty, but it really kind of begs the point, why are you trying to do that and predict and project out now when you don't know how long this crisis will last? If it lasts 3 to 4 weeks, then, okay, we can start talking 3 to 4 weeks about what the year from now looks like. But if this lasts 12 months, then you can't be worried about what a year from now looks like, because you got a year of wrestling with, stability. There are a number of things that a lot of financial institutions in particular do need to be looking at. And I think that's, starting to identify the known unknowns in the situation. Here's the thing. My firm, Cornerstone Advisors, I don't do so much of the strategic planning work as much as a lot of my colleagues do. But I see what goes on, and I have to tell you, Greg, I think my take is that a lot of financial institutions are not that good at strategic planning. I think for many of them, the whole process has devolved into nothing more than a glorified budgeting process. And as a result, they don't do a good job of scenario planning, of true strategic planning. And I think that's going to be the big challenge. With all these unknowns, the idea of really constructing scenarios for what could and will happen over the next 3, 9, 12, 18, 24 months is what's critical. And that's why I say, I don't know what's going to happen, but the process to figure it out has to change.
Well, there's a lot to unpack there, but I think one of the pieces that I think is really worth highlighting is this idea that these organizations aren't good at strategic planning. So much of the way the industry has been run has been looking at the next quarter's results and just kind of optimizing for that shareholder report and things like that. And now we're in a position where it's basically impossible to look at what the next quarter is going to take. And so, I think in some sense, if there is a benefit coming here, it's sort of forcing a lot of institutions into bigger picture strategic thinking, which is not something that they're comfortable with, but it's probably really good for them to spend some time thinking about it and going through various, if-then type of scenarios. What do we do in the event that this lasts, 6 weeks or 6 months or anywhere beyond that time frame. And I think that's something that is going to be really interesting to see, because there is, I think, an opportunity for some bigger picture strategizing around this. As you point out, that's not something that a lot of these institutions are comfortable with. But will the winners be decided based on who is able to learn to do that, who might be able to find some sort of path, some plan to move forward and kind of think in that big picture way? And is there anything that you might suggest to organizations who are kind of struggling with that and looking to expand their usual thought process into something that's a little foreign to them?
Yeah, I do have some thoughts on that, Greg. But before I even share that, I can't help but think to myself that giving advice to some of these financial institutions right now to tell them what to do almost feels like, I'm not sure how to even word this, but it's sort of like the word authenticity comes to mind. I look, on Twitter all the time and LinkedIn, and I am just in awe of what Jill Castilla, the CEO of Citizens Bank of Edmond, Oklahoma, is doing, and just how far front, she is, giving out her cell phone number to customers to call. The task forces that she has set up internally to help stabilize her customers' financial lives and situations. And if I have to sit here and tell a financial institution you need to be doing that, then it sort of begs the question: why weren't they doing it already?
Right, right.
It's like, really, I have to tell you to do that? And so, if you weren't already inclined to be out in front of these sort of things, honestly, I think my advice was just going to fall on deaf ears. You can't, what do they say? You can't change the stripes on the zebra, whatever it is. It's the same thing here. If your organization has a culture that's not proactive about, taking care of these things and truly customer centric, or member centric if you're a credit union, then you know what? My advice isn't gonna help you a damn bit. You got a bigger problem to face. But that's why I go back to number one has got to be about stability, stabilizing your customers or members' financial lives, stabilizing your employees' financials and personal lives. I saw a tweet last week from some guy who said this is a great time to sort of reinvent all of the job roles and responsibilities in an organization. And my reaction was like, 100% wrong. This is the time for stability. We need people want consistency, or or any sense of consistency in their lives when we're facing some sort of crisis like this. And so this is not the time to shake up everything in your organization. But, and I'm sure you're out there on Twitter and on social media as well. There does seem to be this meme or this trend of thought that says, well, since we're in this time of turmoil, let's go fix everything that was broken. It's like, no, actually, this isn't the time to go fix everything that's broken. We have to strive for some level of, normality, whatever that new normal is. But that's what people really yearn for, is let's get back to some semblance of normalness. You also had mentioned something about the benefit coming out of this, and I'm very leery of using the word benefit in any context around here. But I think the reality or the lesson that will be learned for financial institutions is the connection between financial health and physical health. This is the thing. We've had economic crises before. Obviously, we had the financial crisis of the 2008 timeframe, and banks struggled, and credit unions, of course, struggled to figure out what it was. But most of the crises that we have dealt with as an industry in the past have been purely economic driven. They've been economy based issues. And for the first time, this is something that goes beyond economy. It goes to physical health and the impact that physical health has on mental health and financial health, and the financial health both of people and the industry. And I think that's what, one of the big lessons learned is this connection between physical, financial health. Now, I threw in mental health before as well. And I think those three forces, and I think that's what's going to kind of come out of this from an industry perspective, is the recognition of the importance of physical health and the whole construct of delivering financial services.
Well, I think in some sense, this should be right up FinTech's comfort zone, right? We've been hearing people talking for a long time about customer-centric solutions and customer well-being and putting the forefront of their strategies. And some FinTechs, I think, do a good job of that. Some banks do a good job of that. And I think to your point earlier, you can tell who's authentic in this space and who's not. And that authenticity is really valuable. And so I suppose now is kind of the chance for a lot of those companies to prove it, right? To prove that they are able to really take their customers' financial well-being and prioritize that and deliver them something which is going to make their lives better. And because of that tie-in to the physical health, to the mental health, you now see this greater importance placed on financial health. And companies who are going to be able to reassure their customers and their employees and say, we're able to weather this, we're able to help you weather this, I think is going to be a really important piece. But on the flip side, you can see where people are coming from, because a lot of the problems that we're seeing now, and certainly this is a unique situation. I'm not going to say that anybody could have seen this coming, but a lot of the problems that we're seeing now come from systemic problems that have existed for a long time, and we're just now starting to see exactly how dire some of those problems can get with this little bit of bad luck that can come through. And so you can see the temptation for people who say, well, now's the time to make this change, because we're going to have upheaval, we're going to have this uncomfortable period, and we might as well try and come out of it somewhere in a better position than we went in. So I do understand that mentality. I think that it's a balancing act, trying to figure out how you can make some adjustments to come up with a better system than existed in late 2019, versus how you can provide stability that keeps people engaged, keeps people happy and healthy in the short term, is going to be a real challenge. Are there any specific opportunities that you see coming out of this? And again, I recognize that this is potentially, it's not benefits, it's not worth it in any sense of the word, but there may be some ways that this changes the game for the better and some new opportunities that come from that. Is there anything that kind of jumps to your mind there that you think people should be keeping an eye open for?
I'm certainly not going to be the first or original one to say this, but it does start to push on the traditional institutions' ability to deliver digital services. That feels very hackneyed at this point, given what's happened over the past couple of weeks. But here's the thing that I think is kind of interesting about it is, this goes back to the fintech. And I've actually got a post, a fintech Snark Tank post that's going to be published in the next couple of weeks. And the tentative title is Robinhood and the Death of Fintech Fetishism. And the idea is that, we've heard so much over the past couple of years with certain voices saying, the basic underlying voice of it is new is good and bad is old, or everything. If it's new fintech, it must be good because they're dealing with so much nicer and better, customer centric than the old evil banks. But then you've got Robinhood, who has from an operational perspective, didn't deliver on two really important days when the market moved.
Right.
And so this is more than just about being customer centric and being nice and whatever. It's about delivering. And so I think the idea of operational delivery is going to become very important to the traditional financial institutions, especially as they start to realize that the stuff that they have built and deployed from a digital perspective today is decent from a transactional perspective, but really not all that great from an interactional perspective, meaning, the ability to have a conversation with somebody or to guide them through a set of questions that they might have. I have been fairly critical of the chatbots over the past couple of years, but I guess to maybe admit where I might have been wrong, I think the institutions that have taken the early steps on that are perhaps a little bit ahead of the game in terms of having an ability to kind of interact with their customers or members to kind of deal with stuff that might overload their human opportunity, capacity. So, that bell, thanks for not digging me like halfway in between. When we did that live a couple of years ago, I was pretty sure you shortchanged me. So I
know, I remember.
Giving me a couple extra time here. That was good.
Well, no, and I think it's really interesting, the piece that you're talking about. And I think we can go a little bit into overtime here because there's some stuff worth mentioning because, I think there's a balancing act, right? You can have new ideas, you can have things that you can engage new customers in a new and exciting and fun way. But you also now see why there are these compliance pieces in place and why it's so important to pay attention to kind of the serious side of finance, the less sexy side, because, to your point, when you really need to get into the market, can your fintech get you into the market? That you can't have it go down on a big day like that. And there's a number of other areas where you can see that going out. If all of a sudden you're getting 5x the amount of traffic in through your digital channels, and if you're not prepared for that, that's a really big problem. And so you can see why there's this sort of conservative mindset among a lot of the more traditional financial institutions who are saying, look, we can't be sure that this works until we know that it works. An extreme stress test. We're getting an extreme stress test right now. And I think that you see a lot of fintechs who are potentially not up to that challenge. At the same time, you see a lot of the old things that are causing some delays, causing some difficulty for people in moving their finances. And so it's going to be really interesting to see who's able to navigate these waters and come out of this with that balance of having something which can support their customers, can meet them where they are in whatever way they prefer to be met, and yet also still has the safeguards in place to be reliable enough that it's not going to crash because of a huge amount of user surge or something like this. So to me, that I think is going to be the real opportunity here, is for somebody to marry these two sides together and deliver something, and really just recognize the importance of both. Because right now, I think a lot of people in the industry have excelled at one side or the other, and I don't see very many people who've been able to do a great job in both sides.
Yeah, not only would I agree with you 100% on that, Greg, I think we're actually going to see sort of a pushing of the definition of the dissolution of the dichotomy between online and offline. This isn't so much, okay, you can't go to the branches, so therefore you have to go online. No, online or digital still doesn't address all the needs. We still need to have to talk to somebody. I see a lot of banks in particular who are, cutting back on their branch hours, and many others who aren't, with the idea that, well, our customers still need to reach us. It's like, if you had at least published your employee list with a way of contacting people through emails and cell phone numbers and so forth, wouldn't need to come into the branch. And when they do come into the branch, we still need to have some sort of technology support or intermediation to help get questions answered. So I think this is further going to sort of tear down the walls and the dichotomy between online and offline, or digital and analog. And I think both the fintechs and the financial institutions that kind of get there first, well, they're going to be ones who will be ahead of the game when we get back to some sense of normality.
Whenever that may be, hopefully sooner rather than later. But I think I completely agree. There can't be fintech and bank. There needs to just be bank. There needs to just be, I can get my money. I can do it however I prefer to do it. It can't be separate experiences. And I think we're going to find out. We're going to learn a lot over the next couple of months, no matter what shakes out. We're going to see exactly where that line is for what you can do digitally, what you still can't do, where you would need to go into a branch. And obviously, wherever you need to go into a branch, there are cities like Seattle, where I'm in, where you won't be able to. And so that's going to really highlight exactly where that line is. Well, we are past our time limit. I really appreciate you taking the time to chat with me. Your thoughts, as always, are very valuable. And look forward to getting you back up on stage at Finovate whenever we're able to have another one. Hopefully by September, our fall show, things have settled down a little bit. But in the meantime, been a pleasure chatting.
I will be there. I look forward to the next one. And Greg, thanks a lot for having me on.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.